Hey guys, so welcome to another trend breakdown of Euro Audi. It was a sell position that I just took. It was a bearish trade, risk reward of 1 is to 2.5. Did just over 110 pips. The TP was roughly 112, 113 pips. So I'll get straight into the breakdown and show you exactly what I looked for in my analysis before validating the sell position. So being a bearish position, I definitely used supply for my entry because I use supply and demand for my trading. But even before we get to the entry point, let's first identify this pattern that was formed here a while back. So we had this series of higher highs, higher lows for a while, and then eventually we got a very strong breakout below all of this pattern. So when you get this strong breakout, it's an indication that sellers are possibly becoming strong in this market. So then we had a retracement and another strong impulse move to the downside, which is a most it's like more confirmation that sellers are pushing price lower. So now going back to using the supply and demand, whenever we have the impulse from one point to the other, where the impulse move starts becomes our supply zone, right? So where the impulse starts at this shadow to our first bearish breakout candlestick, that becomes a supply zone. So we draw it, we mark and extend to the right. Yeah, so let me first remove the drawing so that you can have a clear picture. So we from this from the beginning of the impulse to the breakout, extend to the right, that becomes a supply zone. So the next time that price will trade back to the supply zone, we want to see if it will react in a manner to show us that sellers are about to become strong. Remember, supply zone is a zone of strong sellers, or rather strong selling momentum. We are expecting sellers to continue to push price lower anytime price comes back to the supply zone. But again, as usual, we must wait for confirmation. Don't trade with a pending order. So just because price got here does not mean it's going to sell. It is very possible that price can get here and it can continue to break upwards. So if you just come to supply and you open your sell position blindly, you're likely to hit stop loss. So we wait for confirmation. So when you're looking for confirmation, the first thing is to see how price will react. If we want price to go down, we want to find a reaction that shows us that sellers are becoming strong, right? So when price go to this point, normally I like to get a rejection candlestick or a rejection wick or a shadow at the supply or demand zone. So in this case, we got a strong rejection shadow to the upside, which is a good indication that the buyers are being rejected. And of course, they're being rejected by the sellers. That's the first thing that I noticed. After getting the rejection, we now want to see if we will get any sign of bearish momentum. It could either be a pattern or it could be some sort of breakout candlestick. So in this case, the confirmation that I used was a pattern. And this is the pattern. If you can check carefully, price went up, down, went higher, then it came and did what? Broke down below this point. So when it breaks down below, this is some sort of M pattern. Now, when we have an M pattern, we come and look for our entry point where? And the neckline. The neckline is the lowest point there. So now I already have my pattern. I already have my neckline. So after the breakout, remember the breakout happened with this candlestick. So after this breakout, we want price to trade back to this neckline. So when it trades back the neckline, that becomes my entry point. So I'll come and enter with this candlestick when it comes and retest the neckline. My stop loss was 45 pips for this trade. My risk reward was 1 is to 2.5. That was roughly 112 pips. So you've seen the process to getting the trade. I started by first identifying some sense of bearish momentum all the way from this point. After identifying the momentum, I come and mark my supply zone. After marking the supply zone, I wait for price to retrace with supply. And when it retraces, I'm very careful to see how it will react. Never forget that. You want to see how it reacts. If you have no reaction that shows you that price is about to reverse and start, and continue to sell, you have no reason to be taking a trade here. And also, one thing I want you to realize is from my entry point, this is my entry point here, this candlestick. I had to realize that this price did not sell immediately. Price did not drop immediately, right? In fact, after getting into my trade with this candlestick, the next candlestick was actually a strong bullish candlestick, though it also got rejected above. So now, this is just to show you the importance of trading psychology. If your psychology is poor, after you get into your sell position here, then the next candlestick, even the next candlestick closes as strong and bullish, you are more likely to get into emotions and start fearing and you close your trade. But with me, as long as I'm following my strategy and I've used my very small stop loss and I have a good risk to reward, I just hold my positions. So price came and dropped below. We now came into profit. After coming into profit, it played here with several candlesticks. Remember, this is the 1 hour time frame. So each candlestick here represents 1 hour. So all these hours price was just playing around. I mean, price was playing around for all these hours since I got into my trade. Then what happened eventually is we came and we had another shadow that went spiked all the way up. You need to realize that if you look at this market using the real-time data, at this point price was actually very, very bullish. It was buying. So again, you can easily get into emotions and close your trade because you fear hitting stop loss. But if you're using a very small stop loss and you have a good risk to reward and you're following a strategy, you should never be scared of hitting stop loss. It's part of the analysis and it's part of trading. So I kept holding my position until it came and dropped all the way to my take profit level. So that's just the importance of trading psychology. It's one thing to learn how to trade, to learn supply demand, to learn all technical analysis. But if you have poor psychology, if you cannot have good risk management, still your results will not be good. Because if your risk management is bad, it simply means that um, you're maybe risking too much. If you're risking too much, whenever you see price going against you, you are so scared of losing. Because if it hits stop loss, you're not actually ready to lose the amount of money you're risking. But if you're risking, like on this trade, I risked less than 0.5% of my account, which is very, very small. So I was not scared of even hitting stop loss. So you just hold your position, be patient, and eventually you come and hit take profit.